S&P futures hit an all-time high today. We're going to talk about why and what to look for going forward. Also, the really weird moves we're seeing in certain sectors that we thought were going to rally that are actually having the opposite effect. So there's a lot to go through. Let's just get right into it. If we look at this bar that's been marked right here, that's Wednesday, July 11th. Well, note that it ties in directly with these bars right here. And again, this whole area is where we had that month-over-month CPI number that came in negative. Since then, that has been the high on the market. Now, whether you're using the ES and you're going to use that high right there, we never really got over it, and we stopped right there again. It's funny how that works. Now, I do think that you have more potential to get over it now, and I'll show you why, just from a technical standpoint. We're going to go through a lot of technicals tonight. There's going to be some fundamentals here, but there's going to be a lot of technicals, specifically rotation. But if you just kind of take a look from that point on, we've had that massive sell down. Obviously, we had that huge move to the downside. That was because of US-Japan and the relation between the dollar and the yen. And again, up this evening is Bank of Japan once again. So we'll see what that brings tomorrow. But we had the rally down. We tried to get back over that. Now, what's always fascinating to me is that when you mark off these bars and you see those levels, and there it is, that July 11th bar, and you're just unable to get over it. Then we have the new control bar, which encapsulates weeks worth of work, taking us down but unable to break. That was actually a pretty good sign, and if we take a look at that level, just looking at it right around here, let's just drop it right there. You can see the break, unable to have that retest, and then you bounce from there, which just puts us again at another critical level. You know, when you start understanding these control bars and how they act, specifically when they encompass several days in a row, they tend to mark highs and resistance points. And it's not just once, but you'll see it over and over again. The same is true to the upside. If you see a bar like this that encompasses like about a week or two, they become control bars, and then they take control of the chart. Just like this to the downside encapsulated all this, control bar, similar, etc. And then you start to see those reversals, right? All right, simple enough concept, but a lot of people lose this concept. I think it's pretty simple, and when you see them, you kind of can't unsee them. So you see here, and then you've encapsulated a week or two, and you break back down. Same thing here. You know, you see that crazy move we had on Wednesday, September 11th. We fell down, the rally back over, and then from there, you've encapsulated 3-4 days, and then boom, it's on. Now we're sitting at the highs. If we take this and we drop it to down here, we're going to clean all this off and spend some time just looking at the technicals of this. It's pretty hard to not like this, right? You have a very clear level. You are going in the quad witching tomorrow, which is really triple witching since they really got rid of the single stock futures. But if you look tomorrow, usually those days are pretty nasty off the open, and then they make a decision later on what they're going to be. Usually we see them tend to trade up later in the day as people put on new positions after they unwind their shorts. You have a lot of people that put a lot of puts going into the Fed, so that's all going to unwind tomorrow. You would think that should give you upward pressure. You would think. There I go again, thinking. But if you watch these two very key levels here, and we look right here from that July 17th date, which was really the high, and you drop an anchored VWAP there, which I tend to like to do. You can see the test of that area. We flipped right in there, and then it was go time. And I think that's really important. So what really moved today sector-wise, we're going to deal with in a moment here, but I really just want to hammer home a couple key things. If we look here again, from this peak to this valley, and we just drop an anchored volume profile from there, you can see the battle that's been going on up here between that value high level and that point of control. Point of control is the most important level to me, really. I like volume weighted average, but these points of control on indexes tells you where everybody's at. And once you bounced off that level, you can see it on Wednesday, 2 o'clock. And this is really important to get. And, you know, a lot of people are beating themselves up about missing today. And, you know, we should probably take a second on this and just take a step back and look at this for a second. So if you're missing today and you look at that 10 a.m. level, and we just get to that level real quick, that's how you close. So when you think about this, this is how you closed last night. You closed at the low after taking out the high and reversing below key levels. You know, the only people that held overnight and hoped that this worked were sociopaths. Like, no one's going to hold that and expect that to work. And of course, you know, you're going to have everyone, including Freddie Fingers on Twitter, it's going to tell you they knew it. That's not really the way to go about this. You want a system that works. You could have just as easily came in the next day, set up, and okay, maybe you didn't catch that, but at least you know which way we're going, and now you know which way that you're going to hold here and what level you need to look at, which is pretty clear where you need to be. It's I think we're right around that 5,700. You probably want to watch 5,700 pretty closely tomorrow. But what was neat about today was it wasn't the sectors that we thought was going to lift. It was other sectors, wasn't it? So let's just drop the 12 in for a second. And what we'll do is let's just make this, we'll leave XOPM, we'll drop that to a line, and we'll drop this to, let's just drop this to a 1 minute. And so we're just going to start with the top 11 sectors and take a look here. And look at this. All right, so you have the regionals, but did anyone really expect gold to rally? And the answer is no. And there's a couple reasons for this, and we'll get into it. Financials and the stocks, but here we are again with gold over biotech. Not really what you would expect here. And they're selling at the low end. They're getting out of the consumer staples. And you wouldn't think that REITs are going to be on the low end of this, but what we're seeing is we're seeing a little bit of change in trend, and let's talk about why we're seeing that. So I'm all set up here. We're getting ready to click. So if you take a look at this, what you're looking at is the balance sheet of the Fed. And a lot of people will look at this and go, well, why do I care? Well, you care because this is really what's been driving us and always does. I think we should change the color of this. We want to change that. I'll just leave it for now. I don't really want to get into all that. By the time I change it and everything else, let's see if we will. I don't think we do. No, we're not going. So if we take a look at this and we can just see how you're holding up pretty perfectly right in here, right? Why'd we stop right there out of everywhere? So here we are, and we're right around that May level, pandemic level. And everyone's like, oh, well, we're not back to these levels. That's what everybody sounds like to me. So what you do then is you mark off the high of this and you just drop this down, right? Coming across. And then you realize that at this level, by the time you got there, okay, in 2 years, look at how much you're off. You're 20% off of this already. That is a lot of money that got circulated in. Now, I know we all want to talk about doom and gloom and we're becoming a third world country and everything else and the sky is falling. But at the end of the day, we came back and we worked all that off to the top of the level. And that's pretty impressive. Now, the question that everyone is worried about and what they were worried about with 50 basis points was, are they going to cut 50 basis points? And then on top of cutting the 50 basis points, okay, we would think that bond prices are going to rally. And if bond prices rally, are they going to continue to sell? Which is then just going to cause the same nonsense that's been continuing to go on, the selling, right? And the bonds, and so they're going to sell into it. So what are they doing? It's a self-fulfilling prophecy. Well, what he came out and said is that that's not exactly what he's going to do. So this is where it gets really interesting. So they are going to adjust their selling accordingly. And this came out from a couple different investment banks this morning that they're starting to slow this down. Are they going to continue to sell? Yeah, they are. But you also have to understand something. They're in the driver's seat. So they own assets. They bought all these assets in here, okay? So picture buying bonds, for example. If you pictured buying bonds, and it's, again, important concept, but we'll take this high. And you bought bonds that are paying 5%, and everybody else is getting 3.7%, okay? And let's just say, we'll make the math simple. You're getting 5, you paid 5, and it's 4%, all right? Just to make the math simple, 1%. A very simple way to figure out the value of that bond, this is a 10-year yield. The simple way to figure out the value of the bond is take the percentage times the duration. So 1% difference times the duration, they made 10%. So if you think about that and understand that they made 10%, so if we go back to the Fed balance sheet and look at it and go, well, in that area, I think it's like 24, right in here. So if they look at the bonds that they have right here and they sold them here, okay, they're up 10% on those bonds. If they were 20-year bonds and it moved 1%, they'd be up 20%. So they're actually selling and making money on what they're putting back into the market. Now, I'm using treasuries, but you also have mortgage-backed securities. You have several different kinds of securities there. So are they in as big of a hurry to sell now? The answer is no, because what's on their balance sheet is going up in value. Now, this is, again, I love this stuff because it gets super interesting. So the valuation of the total assets will actually go up in value. This is where it gets. So as they go up in value, what happens? Well, inflation kicks up. Now, people will assume when they look at the total assets, right? When they look at the total assets, they're going to be saying, well, why is this going to continue to go up? It could go up because of valuation. People are going to say, well, it doesn't work that way. Okay. But you're going to want to pay attention to this because I think you're going to see this slow and I think you're going to start seeing this curve up. And we know what happened here when they injected 1.7 into the market. I don't think that's what you're going to see here, but I do think we're going to start flatlining a little bit more. At the very least, you're going to go to a point here where the trajectory is going to start start slowing down. Now, not this week, but next week, we should really start watching this and seeing how it goes and how much they're dumping on the market. This is why we saw home builders. Just all of a sudden, you see how that's breaking out there on the weekly. Let's get to this daily and we'll pull this up. But that's why we saw like home builders, people like, well, why do we just not continue to push today? Or why is TLT selling down? Well, first, these things got ahead of themselves. Second, I think people are understanding that you're probably not going to get as many rate cuts as you think. What you're actually setting up for might be a reinflation trade because of how fast he cut. Now, you had a bunch of people that told him not, or were out there saying he shouldn't cut this fast. He did what he wanted to do. It was very clear that that's what he was going to do. But if you look at the 20-year and how it's acting, what we did here is we got right back to this level. And at the time recording this, I am long this bond. It just makes sense. But I have a very long-term outlook, right? We started back here in November and we actually added to it again off a move here, and very happy with how it's acting. So there's not really a whole heck of a lot for me to do there, right? Except sit with it and understand they're going to keep cutting. And people tell me it's all factored in. It can't be all factored in. If it was all factored in, it wouldn't have moved the way that it did yesterday, right? People have this belief that the market is very, I guess, the word that it's just very efficient. It's probably the most inefficient thing out there. If it was so efficient, it wouldn't move. It just wouldn't be. So you have fear and greed, and that's what's going to move us. So you have this going on, and I think that we're looking at the reinflation trade. I'm going to give you a couple signs of that in a minute, but let's keep going here. So then we go out there and take a look at what else is going on, and we start to see IGV, for example. Now, IGV all of a sudden puts us in a position here where it's breaking out. So we're breaking out on all-time highs on IGV of all days right now. Why are we doing that? Because they're reinflating the assets. The risk assets are being reinflated. And that's because they're looking for a place to put the capital. So they're going to drop rates. We're going to have to worry about reinflation because of the way that he cut. And people are going to say, well, what do you mean reinflation? Well, home builders and supply out there for home builders, he's going to cause a huge run on housing. I think that that's where we're going next. That's why home builders are breaking out this way. If you take a look at something like Nail, that's why it's acting the way that it is, right? You completely ran up and you can see how it's acting. It's obviously a little crazy after hours, but this is certainly something that we want to pay attention to. Now, one thing I think we have to understand is that we're going to see more volatility as people start to realize what's going on. Even myself, I'm trying to understand when I was looking at things along the lines of, let's say, XLRE, which I really still like here. But I have to look at things like SLG and some of these other names like VNO, and you have to start asking yourself, are they ahead of themselves now if we're not going to get the amount of rate cuts that we think we're going to get? So if we took a look at something like the jobless claims that came out today, for example, and I'm just going to look at it in line form right here. And if we just see right here that we go from 22 over and everyone was panicking because they were spiking up, and you really don't want to see over 250 or 300. You just don't. But we came in lower than expected today with jobs, less claims as well. And so this is telling us that we don't really have to worry about the unemployment number next month because this is already starting to shape up. And now you're going to go into the holiday season, which is usually seasonally strong, no matter how they try to weight it. So when you start to look at this, and that's what they're focused on now, unemployment, you're probably not getting, as a matter of fact, Goldman even said it's probably a coin toss between 25 and 50. I think we're starting to worry about the other side of the coin. I don't think that's the worst side to be on either. In other words, I don't think the worst thing for us to consider at the end of the day here is whether or not we see 25 or 50. I think that's something to consider, and I think that's how we need to look at it. But if we just kind of go down the line here and see, we've already looked at the SPY, we can see how that's acting right here. I mean, is that something that you should be worried about with quad witching? Well, let's talk about quad witching for a second, just so people get it. And it's really triple witching now because they got rid of the futures, the single stock futures. You look at your levels here and you kind of already can see the areas of interest, right? Like you would know that right here you need to pay attention. Let's clean that off for a second. But you would know that like right here you want to pay attention for sure. Do you gap fill tomorrow? Maybe, maybe not. I'm not really sure that you're just going to outright gap fill tomorrow or not. So we're going to have to see how that plays out. You do get pretty wild, but what tends to happen is this. You tend to start out like this, and everybody just assumes that when you start off like this, that it's going to be a wild day. And they undercut, and then they rally, and then they fade. Because what happens is all the asset classes as they're expiring, you have the arbitrage guys. And the arbitrage guys just start picking up the arbitrage. And between all the asset classes, this just gets tighter and tighter and tighter. And it gets that way, and it gets really, really boring to usually 1 or 2 when it might start unwinding. Then when that starts to happen, the exact inverse of this will start to go. Certain names will lift, certain names will just kind of start going by the wayside, and they might just keep falling down, but you'll start seeing more volatility, and you'll start seeing a trend. Whether that trend's up or down, we don't know. The majority of bets this week were puts, considering you were going into the Fed week, and so they're going to unwind that, which does put upward pressure on the market usually, because as they have to unwind that negative delta and they throw it back to the option market maker, then they have to step into the market and buy as well. But you just probably want to watch some of those key levels that we just went over. If we take a look at the NASDAQ here on the 4-hour chart, we can see the point of control here. And this is kind of the point that I'm getting at. You know, you start looking at this stuff and you realize that there's your 4-hour on the Qs, you're below your point of control, which is from this peak. So in other words, let me show you how I arrived at this so that you can do it for yourself. But all you're doing is taking these peaks and valleys, and you want to mark them off because it just tells you where all the players are. And then you can kind of just see that right very clearly, right? So you watch the point of control, you break. This is just kind of what makes me laugh. The people say, oh, it was very clear that we were going to go higher. You know, that's how you came into today. So anybody that was looking at that and just miraculously thought you were going to lift a level that couldn't break at all, you know, I just think it's delusional, but whatever. So if you see how you're playing out since then, and you can see the mark, right? And you can now see how you are, and now you're at that valuation high. A lot of people say, well, that's the high of the move. It's the high of the move until it's not, right? Until it starts flipping, and then everything will start moving with it. So you do want to watch that area. But the thing I would say about the Qs that I find fascinating is you're wedged right in here. So if we get over that area, then we're going to really be looking for something along the lines of not only the gap fill, but there's the full gap fill. And you have no volume in here. So if you get through here, 492 is pretty easy, 496, 497. I don't think that's going to be that difficult with very little volume in here. Matter of fact, if you look from here, from July 11th over, the least amount of volume that you have is in front of you and to that 496 level. I do think you kind of have to watch the reinflation side of the market here, though. We are watching the market reinflate a little bit. You're seeing names, you know, just look at, I always look at this because it's just easier to look at. But this is Thomson Reuters core commodity, and it basically shows everything all at once, so you don't have to sit here and look at copper and gold and everything else. You all know gold's running, silver's running, copper's running, oil's running, but this tells you, you can see at the higher high right here. I just have it on a 30-minute chart, but it pretty much tells you the story on what to look for. And again, you can see right in here where we started to fall, right, you know, and where you are right now. So I kind of do like what we're seeing there. Names like SCCO that are in copper, you're starting to get right above that level once again. Take a look at FCX, same thing. You're getting back above that 55, which you have not been since about, you know, I don't know, we can go back to when did we break that? July 11th. It's kind of crazy how that all fits together, isn't it, right? And that was, when did we break there? That was CPI, the negative month over month, and now you're getting back above it. So this is another sign that my like reinflation notion, or the ability for risk assets to be back and get reinflated a little bit here, global risk on, seems to be the case, quite frankly, to be out there. And I don't think that's a coincidence. I mean, I think if you just did the simplest things here, and again, don't overthink it, because I can sure do that myself. But if I look at month over month here, and then I go, oh, okay, well, that's when that negative CPI came out. And then you go here and go, oh, well, this is where the Fed meeting, and then they finally digested the news. See, all this stuff, when we go through it, I'm not going to draw the stool again for time's sake, but like when you start going through this stuff, it starts making so much sense, right? You know, when you start going through this and you look at the market as a whole, and we pointed this out on Twitter, and we pointed this out in YouTube like a couple years ago, where, oh, look at this bottom, and one of the things that we did was I drew this, and I never got so much like hate mail. It was kind of interesting. Even to this day, I think this was the most hate mail I ever got when I said, you know, no one's going to ring a bell on the bottom. See something first. So here it is. I was able to find it a lot faster. Let's get rid of this before it drives me nuts. So I pointed this out back in the day, where you have this divergence, and it was back here. Let me do it this way so that you can actually see it. It'll make life a little easier just to point it out. But what I was pointing out, and this was 22, and you can see it October 22nd, and the point that I was getting at was you had this divergence, and that divergence was what you needed, right, to tell you when. I guess I am drawing the stool. You see, when you do this stuff, you know, macro events tells you, you know, what is going to happen, okay, or what happened is a better way of saying it. Then the fundamental side of it, it tells you who's going to be affected by what happened, and then the technical side just tells you when to act on that event, right? So like you just had a Fed meeting, right? So out of that Fed meeting, You had the Fed did something. Who was affected by it really was not really who we thought was going to be affected by it if we look at it. And now the technicals are telling us when to act, right? So, I mean, that's a pretty cheesy way to draw the stool, isn't it? Because I kind of went a little lazy there. So if we just do it this way, and you don't have to comment on my stool. I know it's gross. But you see where I'm going with this? So if we look at that for a second, and then you overlay this, and the point of me showing this was on the 22nd. It's the same soup, reheated. And so you see that divergence right there, and that's on the 22nd, and then we just draw this without that drawing tool being that magnet that sometimes gets a little goofy, and we just drop the RSI here, right? And you'll see that, okay, well, there was that divergence, and everybody didn't want to believe it, right? Because it couldn't possibly drop, and it couldn't possibly bottom because they were all short. All right, how'd that work out? But what was this date? Well, this was a CPI number. That was the bottom, all right? What was here? This is when the Fed said what they were going to do after a Fed meeting, right? Right in here. They said, oh, by the way, we're going to start selling assets. Okay, that's why we topped. We bottomed because we peaked on CPI. That's peak CPI if you go and take a look at it. So it's not rocket science why this stuff happened. It just doesn't tell you when to act, and then you have to figure it out based upon your time frame. So when you go back to stuff like this, actually, you might want to watch those 3 minutes again. There was a lot in there. But actually, so when you go back and take a look at something like the SPY and you're paying attention to it and you're watching the breakout, right? You kind of understand what's going on under the hood now. And so when you see this, and again, you know, everybody that was really super smart, they knew that by the bottom of the market before this happened. I'm not that smart. I actually need to see what happened. So when you see these breakouts, and then you go, oh, that's why it happened, because they're reinflating, and that reinflation of risk assets means that they're probably not going to reduce the balance sheet. So we get rid of that, which is then going to see, that's why people are playing the other side of the trade. That's why gold's going up, right? Because, you know, people are like, well, why is gold going up? The reinflation, because, you know, Itchy went out there and raised 50 basis points. So now we're going to have a problem, right? We just don't know when that problem's going to be. I hope this makes sense. So, and what you're going to do is you're going to get opportunity out there, but I wanted to show this on the technical side. You're way overbought. You're way overbought. So just because things look good and we look like we're coming around, you know, the stocks above the 5-day are up here around that, you know, 68 level. The stocks above the 50 are over the 80s. I mean, that's usually like a peak level. You know, you can get a little higher here, but you know, you're getting in the nosebleeds now. Stocks above the 200-day are up there on the high end, and stocks above the 200-day are in the high end. Now, they can stay up here for a while, but that is, you know, some overbought levels. But, you know, the breadth is at the high on the New York Stock Exchange. We'll go over that on Saturday. But you're going to have to look at individual names. And, you know, you're seeing these breakouts, for example, where, you know, Zuckerberg did a podcast, and basically it was the cat's pajamas of all podcasts. And, you know, the stock broke out. I haven't heard it yet, but I hear it's the bee's knees. So we'll see. But if we take a look at stuff like that, you can see how we're popping out here. You know, are people going to want to not be in this as Meta breaks out and it trades up? People are like, oh, I can't pay 560. Are you going to pay 610? You know, institutions are going to start looking at this into the end of the year because they're fine with their profits until the market starts hitting new highs. And then they have their shareholders that they have to account for, right? And the limited partners are going to want to know why they're underperforming again, okay? And so this kind of stuff you have to pay attention to. Overnight tonight, we had Nike get a new CEO, and you're seeing a lot of this. A lot of new CEOs are going into these fields, aren't they? They're really coming back into the XLY name. You know, now we start understanding with this reinflation trade why you're seeing guys buy. You know, we were trying to figure out why Buffett was buying Alta. Now we know, and you can see how that's playing out from here, and now you're getting into that gap, right? And then we're watching Lulu start to rally off that level. There's 55 is right there, actually. So I would watch these names tomorrow. I'd watch Quad Witching. We went through a lot in this video. There are parts of this you probably want to watch again, and I will follow up with some of these parts in greater detail on Saturday. That's it.